Have you ever wanted to start a business? Or maybe you already have one, but it's not growing like you hoped. You're not alone. Many people chase their business dreams, but most hit the same roadblock: money. They use savings, take out high-interest loans, or max out personal credit cards. But what if that's the reason growth feels so hard? There's a smarter way to fund your business without hurting your credit or paying tons of interest. In this video, we'll break it all down. If this helps you, don't forget to like and subscribe to Wealth Society so you don't miss future tips. Stop funding your business the wrong way. Many new and small business owners are making the same mistake again and again. And the more people talk about their business struggles, the more this mistake keeps coming up. So what's the mistake? They're funding their business the wrong way. Too many people are using their own hard-earned money, getting expensive loans, or even worse, using their personal credit cards to try and grow their business. These choices may seem like the only option, but they actually make things harder. They hurt cash flow, add stress, and slow down growth. But here's the good news. There's a smarter and safer way. You can grow your business without risking your savings or damaging your credit. How? By using 0% interest business credit cards. They let you borrow money without paying interest for a set amount of time. That means more room to grow without the pressure. Let's look at how this works and which credit cards can actually help make it happen. The wrong way to fund a business. Many small business owners begin with a dream and a plan, but not a lot of cash, so they do what seems logical. They start using their personal savings, high-interest loans, or personal credit cards. While it may feel like the only option, these choices often create more problems than solutions. 1. Using personal savings. Putting personal savings into a business might seem smart at first. After all, it's money already in the bank. But here's the issue. Once it's gone, it's gone. And if the business doesn't bring in fast results, there's no safety net left for emergencies or personal expenses. 2. Taking high-interest loans. Another common move is taking out high-interest loans. These might provide cash up front, but the interest payments slowly eat away at profits. Even if the business earns revenue, the extra cost of paying back those loans can crush the cash flow. 3. Relying on personal credit cards. Using personal credit cards to fund a business is one of the worst strategies. As the credit card balance rises, the credit utilization ratio increases. This ratio, how much credit is used compared to the credit limit, makes up 30% of a credit score. So when it's high, personal credit scores drop. And that leads to more denials when applying for loans, mortgages, or more funding. The better way. Using 0% APR business credit cards. Now imagine if you could get money to grow your business without paying any interest for up to a whole year. Sounds pretty great, right? That's exactly what 0% APR business credit cards can do. These cards let you borrow money with no interest for a limited time, usually between 9 to 12 months. It's almost like getting a free loan. And the best part? Most of these cards don't show up on your personal credit report unless you miss a payment. That means you can build your business while keeping your personal credit safe and in good shape. How business credit cards work. Let's understand how these business credit cards operate. Personal guarantee, PG. When applying for most business credit cards, lenders don't just look at business credit, especially if the business is new. Instead, they look at personal credit as a personal guarantee, or PG. This means the bank is checking personal credit to decide whether to approve the business card. But once approved, something interesting happens. The business card usually doesn't report to personal credit bureaus unless payments are missed. That's a big deal. Why that matters. When business credit cards don't show up on your personal credit report, it can be a big help. Your personal credit score stays high, even if you're using a lot of credit on the business side. This means you look more trustworthy to lenders, and it becomes easier to get more funding in the future. You can still apply for new credit cards or loans without your business spending dragging down your personal score. In simple terms, you can carry big balances on your business cards and still keep your personal credit strong and healthy. Why 0% APR is a game changer. Using business credit cards with 0% interest is one of the smartest ways to grow a business, especially in the beginning. During the intro period, usually 9 to 12 months, you can borrow money without paying any interest. That gives you time to invest in your business, try out ideas, and work on getting results before paying anything extra. It also helps protect your personal money and keeps you away from high-interest debt. This kind of funding is great for new businesses that aren't making big profits yet. It gives you a chance to grow without the pressure of paying interest right away. The top 5 business credit cards with 0% APR. Now let's go over 5 of the best business credit cards that offer 0% APR for a limited time. These cards give new and current business owners a smart way to get funding without all the risks that come with traditional loans or personal credit. Number 1. Chasing Business Unlimited Credit Card. This card is a favorite choice for many small business owners. It offers 0% interest on purchases for the first 12 months, which gives you time to grow your business without paying extra. There's also no annual fee, which helps keep costs low. When you apply, Chase will check your Experian credit report, but there's one important rule to know about. Chase has something called the 5/24 rule. If you've opened 5 or more credit cards in the last 24 months, you might be denied. The good news is that once you're approved, this business card doesn't count toward that 5-card limit. Number 2, American Express Blue Business Cash Card. This card is another strong choice, especially if you already have an Amex card. It gives you 0% interest for the first 12 months and doesn't charge an annual fee, which makes it a great option for new or growing businesses. It also pulls from your Experian credit report. One of the best features is the cashback feature. 2% on eligible purchases up to $50,000 each year, then 1% after that. Another bonus is the soft pull advantage. If you already have an Amex account, applying for more Amex cards usually won't hurt your credit score, since they often do a soft pull instead of a hard one. Number 3, PNC Visa Business Credit Card. This card is a great option because it offers 0% interest not just on new purchases, but also on balance transfers. That means if you already have debt on another card, you can move it here and avoid paying interest for 13 billing cycles. There's no annual fee, and it pulls from your Experian credit report. To get this card, you'll need to open a business checking account with PNC. It costs $100 to open, and there's a $12 monthly fee if you keep less than $500 in the account. This card is very useful if you want more time to pay off existing debt without extra costs. Number 4, U.S. Bank Triple Cash Rewards Visa Business Credit Card. This card is a great pick for businesses that spend a lot on gas or charging electric cars. It offers 0% interest for the first 12 months and has no annual fee. It usually pulls from your TransUnion credit report. One of the best parts is the 3% cash back on everyday business needs like gas, EV charging stations, cell phone bills, office supplies, and even restaurant. To improve your chances of getting approved and possibly receive a higher credit limit, it's a smart move to open a business checking account with U.S. Bank. Deposit between $500 and $1,000 and keep it active for at least 3 months to build a good relationship with the bank. Number 5, Bank of America Business Advantage Unlimited Cash Rewards Card. This card is a solid choice for business owners who want both cash back and an interest-free period. It gives you 0% interest for the first 9 billing cycles and doesn't charge an annual fee. Depending on where you live, it may pull your credit from either Experian or TransUnion. You'll also earn 1.5% cash back on all your purchases, which adds up over time. To improve your chances of getting approved, It's a good idea to open a business account with Bank of America and deposit $500 to $1,000 about 3 months before applying. This helps build trust with the bank. Plus, Bank of America has 3 other business credit cards with similar 0% interest offers, so you'll have more funding options in the future. How to use these cards the smart way. Getting these business credit cards is a great first step, but how you use them is what really makes the difference. It's important to have a clear plan. Before spending, know exactly how much money your business needs and what it will be used for. Use the cards for things that help your business grow, like inventory, marketing, or equipment. Never use them for personal spending. Always pay on time. Even one missed payment can lead to interest charges and hurt your credit. To stay on track, set up automatic payments. Also, know when the 0% interest period ends and plan to pay off the balance before that date. Don't put all your spending on one card. Try to build good relationships with more than one bank. Spread out your expenses, stay below your credit limits, and avoid maxing out any card. This smart approach helps your business grow safely and keeps your credit in good shape. Final thoughts. Starting or growing a business doesn't mean going broke. You don't need to use all your savings, take high-interest loans, or max out personal credit cards. A smarter way is using 0% APR business credit cards. They give your business time to grow without hurting your credit. Most don't even show up on personal credit reports, unless you miss payments. Just remember, strong personal credit still matters. It helps you get approved for better funding. So ask yourself, are you scaling smart? If this helped you, hit the like button and subscribe to Wealth Society so you don't miss more tips on growing your business.